Welcome to another installment of Soluna's AMA series, where you, our shareholders, and our followers on Twitter and LinkedIn can get your questions answered. In this Q&A, I, CEO of Soluna Holdings, answer questions from shareholders and potential investors. Most ask questions about operations, future projects, cash flow, and more. If you're a new shareholder, welcome to the community. Please follow this channel to stay up to date on happenings at Soluna. If you are a current shareholder, I want to thank you for your support and patience as we ramp up our flagship sites and continue to grow our enterprise and drive shareholder value. Learn how to submit your questions, if you haven't already, at the end of this AMA, or follow the links in the comments below. Thank you. Okay, welcome again to another AMA. My name is John Belizaire, and I am the CEO of Soluna Holdings, Inc. I'll be answering shareholders and potential investors' most asked questions about all things Soluna. If you'd like to see these answers in written form, please visit solunacomputing.com/blogs. We have a written version of my answers there. And stick around to learn more on how to submit your questions at the end of this AMA. And thanks to the shareholders that submitted their questions here as well. Before we begin, I'd like to start with some legal preamble. The following content is completely qualified by the legal disclosures on the slide following this one. Our goal is to share with you some of the strategic thinking and financial analysis we are using to guide the growth of our business. The content is in line with our principles of being accountable and transparent with our shareholders. And we operate in a hyper-dynamic economic environment. That's a fancy way of saying things change quickly. What we're telling you here is based on our estimates and assumptions, which are our best guess, and we reserve the right to revise our point of view based on new information and changes in the business environment. Despite an uncertain, dynamic environment, we must plan and make operating and investment decisions. This presentation lays out some of that for your review. Do you plan on releasing monthly operating updates soon? Soluna's PR is way behind its peers in this regard. Well, we have been releasing metrics on the sites, actually. If you go to our website under the news section, you'll see updates for July and June. After Project Dorothy is fully ramped, we will consider sending our press releases similar to peers with key hosting and proprietary mining operational metrics. We'll probably begin something like this in the fall. Is Soluna confident that the company can deliver all projects on time and within budget as it is right now with the challenging climate in the market? Well, we've covered a lot of our progress on projects in our recent press releases. In fact, in our quarterly update press release, we talked about 19,500 machines that have been deployed across all 3 data centers by the 15th of August. Project Sophie, in April 6th, we announced a 25 megawatt hosting contract there. We've since filled the site, and in June, the site achieved one of the highest utilizations of its operating history. Project 1A, we also filled that with 25 megawatts of hosting partners, strategic partners including Compass Mining, and we completed the deployment of Project 1A with 100% of the project deployed as well. Project 1B, in May, we announced a $14 million prop mining joint venture with Navitas Global, and we completed a tender to purchase over 8,250 machines at a cost of $11.25 per terahash, including all the fees, import, and taxes. The efficiency of these machines is quite high as well, 29.9 joules per terahash. Machines continue to ramp, with over 3,600 were deployed at the time that we made the announcement, and we continue to deploy and will deploy through the end of August into September. How come projects are being shut down as mentioned in the last report? A 75% drop in income doesn't send a very good signal to the market. Well, Project Marie was decommissioned last year as part of an effort to refocus our resources on Project Dorothy. We also returned collateral that was housed at Project Dorothy to NYDIG, one of our lenders. The revenue drop in our 10Q is driven by the decommissioning of Project Marie, and a move from proprietary mining at Project Sophie last year and earlier this year to primarily a hosting business. You should begin to see the ramp of that revenue over the next 2 quarters as we complete Project Dorothy's rollout, and you'll also see the full multi-quarter benefits of the new Project Sophie business model. An illustration of our earnings power of the new business models appear in our 2023 earnings power presentation. You can get that on the investor page on our website. Thanks for that question. I mean, it's nice to see positive working capital, but if we know that it will be burned solely by operations, I wonder how you would react to that. Well, keep in mind we have a few ways to fund our ramp up to cash flow positive and growth. First and foremost, we may maintain a high degree of financial discipline in how we spend our cash by focusing our expenditures on products and services that move us along the shortest path from cash burn to cash positive, and we defer those that don't. We maximize the cash flow generation of existing assets by continuously improving our efficiencies, and you should see those efficiencies work their way through the P&L. So stay tuned for our future cues to see those improvements taking place. Would you mind explaining if the cash burn from operating activities will be reversed in positive figures from the full deployment of Dorothy 1B? Well, we plan to achieve positive operating cash flow through a combination of ramping and optimizing our existing infrastructure and controlling costs. For more information on this, please take a look at our 2023 earnings power illustration for more information about how the cash generation potential of our facilities takes place and what that looks like in our P&L. This next question is about terms in our note holder agreements. It covers a section of our 10Q where it talks about the notes, conversion rates. I'm not going to read the full question, but the point of it is, what is the strategy to address the stalemate situation? Can you pay a portion of this down, restructure the remainder, or amortize it over a more extended period? Well, generally speaking, the assessment is that there's a limit to the conversion levels, and you are right. There is a limit to the amount that note holders can convert instantaneously while hitting a threshold of 9.99% limit that's in the agreement. As I noted during my recent fireside chat with Water Tower Research, our management and board continuously evaluate our capital structure and the optimal way to address any issues presented, given the dynamic nature of the business and the capital markets environments. We believe that the best approach is to focus on building earnings power at the company that can be used to optimize our capital structure. And as cash flow grows, our business options and opportunities will also grow, as will our ability to pursue non-dilutive opportunities to raise capital and also support the company's growth and build shareholder value. From your 10Q, I see the judge in Nevada dismissed NYDIG's motion without prejudice, postponing the case until Kentucky issues a summary judgment. If NYDIG wins, has anyone actually successfully pierced the corporate veil in Nevada? Well, I'm not a lawyer, but Soluna has been advised that it is extremely rare for a piercing the corporate veil action to be successful in Nevada. While it is generally difficult to pierce the corporate veil in Nevada, there are a few Nevada cases where a party has pierced the veil. However, these cases are factually different from our case. This question is about our power costs. The shareholder asks, the majority of the industry reports a netted power costs, gross power costs combined with the benefits of ancillary grid services. When you state your power costs of $30 per megawatt hour, is that on a gross or net basis? Great question. All of our power costs are true power costs. In other words, we do not net the benefits of ancillary services or other power trading activities in our calculation of average power costs. Thanks for the question. Project Kati is a new 166 megawatt wind farm in Texas. You're already in the planning phase with a signed term sheet. What have you learned to expedite the process versus the Dorothy process, which was drawn out over 16 months? And also, is the development estimate for the build-out of Katy still accurate? Well, Project Katy is benefiting from our experience at Project Dorothy. We now know the ERCOT process intimately and understand the required interconnection studies. We're working closely with our power partner to get these key studies completed as soon as possible. And Project Katy has already completed the first of 3 or so major studies required to complete the planning process. Project Dorothy's delay was due to 2 main reasons. One, the ERCOT process was new, fairly undefined, and it was introduced just after we completed our submission to the interconnection process. ERCOT was still working to understand the nature of these new flexible data centers, and Soluna was working with their planning and engineering teams to help educate them. Today, as a result, we have a great relationship with ERCOT and the transmission service providers. Now, on your question about the cost of development, we aim to reduce our cost of construction and optimize the design of each new data center we build. So we believe Project Katy can be built faster and more cost effectively than Project Dorothy. In fact, in my letter to shareholders, I referenced the metric of $450,000 per megawatt of build cost to illustrate our project's earnings power and return on invested capital. This is still our target, and we will keep you posted with Project Dorothy with Project Katy, and as we begin bidding for our construction partners and after the ERCOT approvals, we'll keep you updated on the build cost. Thank you. Springland committed $35 million to multiple Soluna projects. To date, it has committed about $12.5 million for an 85% stake in Dorothy 1A. Is the remaining $22.5 million earmarked for future projects? Well, Springland Capital has been a great partner for our company. And yes, the SLC commitment is across multiple projects, and we will present them with projects from our pipeline, including Project Katy, for investment consideration, and the broader 700 or so megawatt pipeline that we have will be submitted for their consideration as well. As someone mentioned on Twitter, your company sold off most of its revenue generating assets. So what's the plan now? Well, I think that's a bit of an exaggeration. It's not true that we sold off most of our revenue generating assets. We did commission Project Marie. We sold Edith, our smallest data center. That was our original data center. And we sold off portions of Dorothy 1A. We sold up to 85%, and Dorothy 1B about 49%. And we continue to own 100% of Dorothy 2. That's a 50 megawatt extension of Dorothy. We own 100% of Project Katy, the 166 megawatt project that we have under development right now. And we have 100% of the over 700 megawatt of near-term pipeline projects. So to be clear, with respect to Spring Lane and Dorothy 1A, we own 15% of that project, and we have the right to half of the free cash flows coming from the other 85% once we return their capital and they meet their IRR hurdle. This is a very important aspect for people to understand, that today we're enjoying a portion of that, but after Spring Lane gets the return of capital and a hurdle rate, we will participate in a portion of that. Now, while this is not an immediate cash flow to Soluna, the company is in a position to receive upwards of 57.5% of that project free cash flow over the long term. So 15% plus 42.5%, or 50% of 85%, for example. And so we intend to execute the plan we laid out in my letter to shareholders, and namely, we will aim to develop up to 50 megawatts of our Project Dorothy 2 through project level partnerships, leverage existing infrastructure, and reduce costs of construction through various design optimizations. And we will sign term sheets like Project Katy and advance pipeline projects through the ERCOT process until they are shovel ready. Thanks for this question. What are the highlights that we should garner from the queue? It's hard to tell if you guys will make it. Well, that's a good question, and I know that there are some concerns out there about the company's long-term viability. given the recent financial statements that have been put out. I think the key takeaway you want to get from our financials and the plans that we've put out and our execution to date are four key things. The first is financial strength. Our balance sheet continues to strengthen from a combination of new investments and continued focus on financial discipline. Number two is we're diversifying our revenue sources. We successfully transitioned and diversified our revenue sources from largely proprietary mining to a mix of hosting and mining, thereby reducing revenue volatility and adding financial partners. The third is improving asset mix. We decommissioned underperforming operations and we launched state-of-the-art high-performance facilities, and we're setting the stage for future growth. And then the last is pipeline growth. And we've mentioned it throughout this Q&A. We're aggressively pursuing new growth opportunities, including Project Dorothy and Project Katie, and receiving enthusiastic interest from potential investment partners at the project level. And so that should be an encouraging view. As I said, it's hard to see from our financials as we're going through a transition. You'll start to see those financials turn around in the coming quarters. But this is a good sense of what you should read from the Q, that we're making good progress and we are executing well. Thank you. Thanks for submitting your questions. If you haven't, please connect with us on Twitter. We're at Soluna Holdings. On LinkedIn, we're Soluna Holdings company page. And if you haven't joined our newsletter, please follow the link here in the video description to join. It's a great place to get insights and questions that we get answered and so forth. We love answering questions on the AMA. If you haven't had a chance to answer your question here or don't see your question answered, it's not too late. Fill out the form in the video description box below and or drop your questions on Twitter, and we'll answer them on the next installment of the AMA. Thank you to our shareholders. Again, thanks for your patience as we build and continue to grow our company. And if you're new to Soluna, welcome to the community, and feel free to enjoy all the content on this YouTube channel. And until next time, we keep pushing over here.